Have you been thinking about purchasing a home, but concerned about the cost? Well, keep listening to understand some of the things that you should consider in today's climate. Hello, and welcome to the Wealth Minded MD podcast with your money best friends. I'm Dr. Brittany Halford.
And I'm Dr. Alicia Taylor.
And of course, we're here to help you build wealth and make good money decisions so you can create the life you desire with more control over your time. Leisha, can we talk about life insurance for a second? Because I feel like this is one of those things that people either avoid or overcomplicate.
Exactly. And honestly, a lot of us think we need these big, complicated, expensive policies when in reality, most people just need a solid term life insurance policy that actually protects their family.
And that's why we love working with PKA Insurance Group. They're independent brokers, which means that they're not tied to one company. They shop across all major carriers to find you the best option.
And what I really appreciate is that they're not trying to upsell you. They'll actually tell you what you do need, what you don't need, which is rare in the insurance world.
Exactly. Whether you're getting coverage for the first time or you already have a policy, they'll review what you have and let you know if it's solid or if there's something better or more affordable out there.
So if you've been putting off life insurance or wondering if you actually have the right policy or if your current policy is a good fit for you, this is your sign.
Reach out to PKA Insurance Group at pkainsurance.com or call 1-800-258-1018 to get started. And don't forget to tell him that we sent you. Also, the link is right in the show notes for your convenience. So click the link and get started today.
All right, Brittany, what's been going on over there with you and your family in Boston?
Oh my goodness, Leisha. It is supposed to be spring, but there was rain and snow for about 2 hours yesterday. And so I bring this up because as we are shifting with us living in the Northeast, and I think probably for those who live in the Midwest, we go through this mindset shift like, okay, it's going to be winter. I'm going to slow down. Oh, spring. I can see the flowers. Like this renewed energy and hope for better weather. And then you're deflated because spring can't make up its mind and it wants to snow again. And so for me, I have already put away my winter coat. And then for my kids, they're like, Mommy, what's the climate today? And trying to figure out activities and all the things. So the weather is causing a bit of chaos temporarily in my family right now.
Girl, if you live in Atlanta, you'll have those problems, okay? It is a little chilly this week, but I think it's warming up in the next day. So as we're recording this, by the time you all hear it, it might be 85 degrees up here. There was a little cold front that came in. I do agree with you. It's so funny. Me and my colleagues, we were like, do we need a coat? What is happening? It's a little chilly. So the weather can't make up its mind. And I remember us having a conversation a few weeks ago about how it was hot in March, And so I don't know. I guess what they say about the groundhog is said we're going to need a few more weeks of that coolness. Don't get too excited yet. But yes, I agree with you. The weather has been a little bipolar, if you will. One day is 80, the next day is 60, and you got to keep on your P's and Q's and check the weather app.
Yes. And just weighing on you like, okay, when is summer coming? That's where my head is how much longer do I have to go through this? Because the winter is inconvenient. I mean, it's just very inconvenient. So as we're talking about the climate, though, not only temperature, also economic climates. And there has been a bit of fluctuation there as well. And as someone who has recently purchased a home, we purchased our new home in 2024. As someone who has a rental property, I'm always paying attention to the current economic climate and mortgage rates to understand if there's an opportunity for either for us to sell if we want to, or for us to refinance our home. And if you're listening to this episode, this spring time is a time in which a lot of people start to look for their homes that they want to purchase as you're transitioning out of residency, or you're getting a new job, or you're just like, listen, I just need to upgrade. And the summer is a great time to move because I don't have all the inconveniences of the winter. You also might have been very pleased, like, oh yeah, interest rates are dropping. There are predictions that there are going to be more homes on the market. Yes, it's my time. And then you see that interest rates have risen. So So if you're feeling like not only is the weather being a little bipolar, but also the housing market is a little bipolar, I feel your pain. Alicia, do you pay attention as a renter? How much do you pay attention to the housing market and what's going on?
Yeah, you know what? Probably not as much as you, I can admit, but more than you might assume because one of my brothers is a real estate agent and my other brother is looking for a home. Between talking to the both of them, we've actually talked quite a bit about housing prices and interest rates. And at the time of this recording, there has been this war in the Middle East, which has raised prices of a lot of things, including rising interest rates. And so, the homes may not be as affordable as perhaps they were even a couple of months ago. So, yes, these have been some frequent discussions about, especially my oldest brother who's looking for a home, is should he buy the home now? Should he wait a little bit? Are interest rates going to dip? Is he going to be upset if he buys now and then the interest rates dip a month later? Yes, you can refinance, but that still involves some work. Should he start looking now? Those sort of things. And of course, my other brother, who's a real estate agent, is like, all right, you and everybody else in their mama are waiting for these interest rates to drop. So as soon as they drop, you're going to have more competition. So he's of the mindset that right now, if you buy a home, you might be able to get some buyer concessions. You might be able to get your closing costs paid for. You might be able to get a better overall deal. But of course, you're dealing with a slightly higher interest rate. So it's very interesting to kind of hear both of their perspectives. And of course, around this time of the year, you and I both work with trainees, whether it's medical students graduating or residents that have finished their training or fellows that are entering fellowship or finishing fellowship, or maybe early career physicians who have finally saved up enough money where they feel comfortable buying a home. People are looking for houses. This is around the time that a lot of physicians start looking to buy a home. And so I think this is a great episode to dive in because I think there's a lot of people, from my own personal family members to colleagues and friends, who are thinking, is now the time for me to pull the trigger and buy this home?
Yeah, yeah, yeah. And for all of you who have a home and you're thinking about selling a home, then this episode is also for you because that's one of the things that for me, I was considering maybe selling our rental property. And we can talk about that. But with interest rates dropping, then that therefore allows for more competition, as your brother mentioned. So, from a seller's perspective, I'm like, okay, this is a good time. People are going to be interested, wanting to purchase a home. But after the war started, then the interest rates rose again. So I want to take a step back to actually talk about what impacts mortgage rates, because this is something that I really wasn't as aware of before I purchased our first home, and understanding how you might be able to pay attention to these rates and do your own research to maybe fill out if this is the right time or not for you. So, most people think that the Federal Reserve controls mortgage rates, and it doesn't, not directly. So, when you're thinking about your 30-year fixed mortgage rate, it is primarily tied to the 10-year US Treasury yield. When I was talking to our lender, like, hey, what are the current rates right now? Is there an opportunity for us to refinance? He's like, they were down, but now they're back up. And if you want to pay attention to anything, don't watch the news about what the Federal Reserve is doing. You want to pay attention to this 10-year US Treasury yield. And so you can just Google 10-year US Treasury yield. What will come up is a graph and kind of see how the trend has been, because this is the single most important thing that you can understand when you're thinking about that mortgage rate. Now, what is a 10-year Treasury yield? It is basically an annual return or an interest rate that the US government pays to borrow money by selling its debt, securities like bonds, notes, all of those things. So we had a whole episode on bonds, and Alicia definitely understands bonds a little bit better than me. But think about it as an IOU from the federal government. Okay, we just gonna keep it simple here. And then they pay you back a little bit of interest, and that interest is a yield. Okay, that is kind of what we should be monitoring as we're thinking about interest rates, because we are often getting a mortgage from a bank. And so if banks can not only with the Federal Reserve trade money between themselves cheaper, but also that the yield now that the government is paying is a little bit less, then that means that the rates will be less. So the typical mechanics is that the yield is going to move inversely with prices. And so when you think about investors, they sell bonds and then that money moves elsewhere and prices drops and yields rise. So it's kind of this inverse relationship. as we are thinking now about mortgage rates, then we have to look at that metric plus some more, which is the spread. So it's the 10-year treasury yield plus the spread. And the spread is basically these fees that the bank adds to the 10-year treasury yield to calculate their 30-year mortgage rate or whatever the mortgage rate is. And the spread includes things like payment risk, it includes things like your likelihood to default, also some profit margins that are within the bank and market uncertainty. So my lender said, think about it as a 10-year treasury yield plus or minus about 2 to 3%. And that would give you the 30-year fixed rate.
Is that accurate? Like in your experience, has that been accurate? Is that based on when you look at what the average is right now and you do that calculation, are we getting around, I think it's like 6.1 or 6.2%?
So right now the interest rates have risen a little bit more. So it's like closer, honestly, to like 6.5%. But yeah,
Okay.
it actually is a really good estimate. I mean, every bank has its own rate depending on who you are, right? It's the bank economic factors and then also those personal factors. But I think it gives you a good benchmark to trend and to follow to understand if this is the right opportunity for you. And what, as you are thinking about, should I purchase a home? If I had this interest rate, what would that mortgage payment be? Can I afford that? What interest rate would be my target in order to have an affordable home that I actually love and enjoy? Then this is a great way for you to follow that trend and know when you can engage with the banks.
This is very helpful. You taught me something new today. I'm like, all right, 10-year treasury yield plus about 1 to 2%. But Brittany, I'll be honest with you. What I'm hearing people say is I'm waiting for them rates to go back down to 3%. So can you let our audience know your thoughts about whether or not that is a smart move or not? I don't know if smart is the right word here, but whether or not that's something that you would recommend. Like now that you told us how we can figure out what an average interest rate might be, how do we figure out whether or not the current interest rate is something that is sufficient or good enough for us to buy at this time?
Yeah. So when we're thinking about our home purchase, right, the interest rate is one factor. It's not
Mhm.
everything. It is one factor. For us, we were already in a home, but we wanted more space. And the economic climate was not favorable. When we purchased our new home, we locked in initially at a 7.1%, which is like, you talking 3%. 3% sounds fantastic to 7.1%. So it was not the ideal situation, but we had these other things. We had the money in the bank. We could afford the mortgage. We had enough emergency savings that we could afford. When you purchase a new home, there's always something. So any of the unexpected costs that comes with a new home purchase without impacting our livelihood. And we knew that there could be an opportunity to refinance. So I would say really give some thought on how much home you can purchase. Because when you think about your mortgage is the least amount that you're going to pay every month. So you want to add at least, I would say, 2 grand more every month to start either to spend, on your home expenses and everything that is included, or to save whatever the difference is. Because a mortgage is the least amount that you're going to pay because you have also property taxes if they're not incorporated into that mortgage fee. You have those unexpected expenses that come up and insurance and all of that. So you really want to get a good estimate on what is your cash flow. Can you afford the mortgage payment at the current interest rates? And also understand your emergency savings and how much you might be able to afford if something else were to happen. And then think about refinancing. We refinanced our home after coming in at the 7.1% when there was a drop. Because I monitored the 10-year treasury yield, I saw that there was a drop in opportunity and we refinanced now at 6.5%. I don't think with the current economic climate and all of the uncertainty that we're going to get down to 3% anytime soon. And so if you are looking for 3% in order to get the home that you desire and you're renting and you're very comfortable where you are, I would encourage you to maybe stay where you are because I don't anticipate that we're going to encounter a 3% anytime soon.
Yeah, I hear you. It's just I don't know if you've ever used these like mortgage calculators, but if you ever type in like interest rate of 3% versus interest rate of 6%, that monthly payment is very different.
And the amount of home you can afford is very different at those interest rates. Yes.
Yeah, some people might be doing that calculation and going, man, if I just wait for the interest rate to go down, my monthly payment is going to be so much cheaper. But as you mentioned, that's not guaranteed to happen. I don't know if we're going to see rates of 3% anytime soon. That was during a national pandemic. And so, knock on wood, unless we get one of those again. And so, we got to start making our calculations based off of current interest rates or somewhere around that 6% mark. At the time of the recording, there's been a lot of crazy things happening. The war in the Middle East, which has increased so many different costs and cause interest rates to rise. So for some people, as you mentioned, maybe it's best to kind of wait things out from that standpoint for a couple more months. But I always tell people, I think the right time to buy is based on your own unique situation. If you know that you're going to be in this area for 5+ years and you're going to be stable in that area and you're stable in your job, then maybe it does make sense to kind of take a page out of your own book, Brittany. And that means maybe buying a house now at a slightly higher interest rate under the understanding that you can refinance later. For other folks, it's really thinking about, okay, well, how much home can I afford? Do I have the cash reserves on hand to sort of pay for all the costs associated with purchasing a home at this time? One of the things I was talking to my realtor brother about was about some of those costs, and I just asked him as someone who hasn't purchased my own home, but I was like, hey, a lot of physicians get a physician mortgage that doesn't require a down payment. What are the other costs associated with actually purchasing the home? And he was like, well, Alicia, you have the loan origination fee, which sometimes can be 1 to 2% of the mortgage price. You've got all of these other fees. You've got closing costs. Usually you've got to pay upfront some of the property taxes or homeowners insurance or HOA fees. And so oftentimes you probably need between 3 to 5% of the mortgage in cash just to even complete the process. And that doesn't sound high when you say 3 to 5%. But if you're looking at a home that's $500,000 or more, that adds up pretty quickly. That can be 25, 30 grand easily, depending on the area and how much home you buy. And so, along with looking at interest rates and understanding where they are at this current time, it's also looking at your own financial situation and saying, how much home can I afford at these current interest rates? And how much of a mortgage can I afford? And should I even take out the amount of mortgage that the bank has approved me for? Maybe you're pre approved for $750,000, but you've got 6 figures of student loans and other financial obligations. And so maybe it may not make sense to purchase a home that's that expensive at this time. So I think there's a lot of factors. Brittany, I know I'm kind of getting off on a tangent here, but do you think there's some other factors that folks should consider, especially around this time of the year when so many professionals are thinking about buying a home?
Yeah. So the first thing, not only just like the cost of the home and the cost of purchasing a home, but also understanding what you can control and then also thinking about the lifetime value of your home. I think oftentimes we just think about the here and the now, but what area are you purchasing in? What is going on? Could that value increase or decrease? As they talk about this housing bubble, and since the pandemic, prices, the value of homes were driven up so much, like the bubble is going to pop and then things are going to normalize again. What does that look like if you lose value in the home right now, especially as you're thinking about refinancing and maybe selling the home or moving in the next couple of years? So I think all these factors are really important, and nobody can predict the future. No one can predict the future. And that's why understanding where you are right now and what you can control is really important. So if you're someone who is still interested in purchasing a home, one, look at your credit score. Okay, what is your credit score today? What factors are included in influencing that credit score, and how can you improve that? Alicia, you mentioned student loan payments. Do you have any consumer debt? What is your debt to income ratio? Because these are all of the things that the bank is going to examine when they're calculating your interest rate. And the more favorable you can look as a candidate for that loan, the better your interest rate is going to be. Mentioned also 0% down payment, but actually, if you have some down payment, then that could help you to lower your interest rate. So, how can you increase your savings? Examining your cash flow, what things can you eliminate again without sacrificing your joy or your livelihood, but to give you a bit more of a cushion or a boost for some of those costs that you mentioned? And then, how do you position yourself amongst multiple lenders and getting some feedback for people who already have a home of what their experience was? Who did they go with? How did they negotiate if they did? So that when the time is right, when you're ready, you're not doing this research. You're not preparing to get ready. You are able to seize the opportunity because, as we mentioned, there's so much uncertainty that is going on right now. And if this is a priority for you, that fluctuation of interest rates might drop and it might only be available for a week or 2 weeks' time. And so if you can can engage with lenders and lock in a rate very quickly because you have already examined and gotten some of these documents as well together. So they like to know, looking at your bank statements, looking at how much you have in retirement savings, kind of doing like a net worth calculator, then that would be really helpful to expedite the process so that you can lock in the lower interest rates if that occurs.
All right, Brittany, I got a couple questions for you when it comes to buying a home. All right. My first question is from your experience, because you've now bought two of these things. From your experience, what documents does one need in order to get pre approved for a home and actually secure a mortgage? What documents do they need to have on hand?
Okay, so these are a lot of documents. And I would say, one, you want to understand whatever your credit score. You don't necessarily have to have that document on hand, but that's the first thing that they're going to want to do is they're going to run a credit check. So understand what your credit score is, what influences your credit score is very important because that's going to be one of the biggest things that you'll need. And then I kind of hedge on this one because they want the most updated. So they're going to want your past two tax year returns. So those are things that you can get because that's not going to change, right? It's tax season, get those tax returns because they're going to want that. And then they want to know like your credit card statements. And that was the one I'm kind of hedging on because they want to have like your past 2 months or past 3 months of those credit card statements of all the credit cards that you have. So you might want to consider, is now the time to open a new credit card or should you wait until after the loan has been processed and you've closed on the home before you open up any new credit cards? And then they also like to have some retirement things, but then again, they might want more recent ones like within the past 3 months. So that might not be a document that you want to secure, but at least knowing, all right, can I log into my retirement accounts? Do I know the passwords? Like all of those things that just add a level of complexity to this process. So I would say definitely do the credit report, definitely do the credit check because that's the first thing that they're going to want to know. Also, if you currently own a home and you're purchasing another home, they're going to want to have some documents of that home situation, that loan as well. How much equity do you have in your other home? What is the payment? And what are you going to do? So if you have renters in there, gathering that lease for the renters, how much the renters are actually paying, or if not, like what you're paying as far as your current mortgage and what you plan to do with that home. And then they're going to want to know all of your credit cards and then all of your retirement accounts. And so that gives you at least a good foundation. They're going to need some personal information. So copies of your driver's license. They typically don't need a copy of your social security card, but at least knowing the social security number, getting all those details as well.
All right, so that's the documents you need to have on hand. When you said all your credit card statements, my life just flashed before my eyes because I have a gazillion credit cards. So this whole travel hacking thing. So I'm like, oh Lord. Okay, thank you for the heads up. Another question is somebody might be listening to this and saying, I want to purchase a mortgage. Thank you for telling me the documents, but how do I pick a lender? Like, how do I get the pre approval process started? How did you go throughout the process of picking a lender? Did you find an agent first and the agent showed you a lender, or did you find a lender, AKA a bank first? Like, how did you navigate that process?
So I found a bank first. We did have an agent because we've basically used the same agent for our entire time in Boston. She's fantastic. So we had an agent and she had some preferred lenders as well. So if you have an agent, then you can ask them if they have a list of preferred lenders. That will give you a good baseline. But also think about the type of mortgage product that you want. So for us, we wanted a physician's loan. So we targeted the companies that had a physician loan product. And if you want a different type of loan, then just doing your research on what type of loan you want and seeing who offers that. And then making a list, and you can start to reach out to them now. You're going to wait for interest rates to drop, but you kind of want to understand how do they work with their clients? What are kind of their loan fees that they talk about for loan origination fees? And if there's a problem, do they sell the loan? Do they sell your mortgage to another bank at any point? Do they have an option for refinancing within their system where you don't have to submit all of the documents? They have already a built-in program that maybe you just have to fill out a simple form and pay a small fee. And what is that fee? Asking those questions right now and doing like an interview with a lender is really important. But if you don't know where to start, I would just start with your local banks and credit unions because, again, most of these companies will mandate in some cases that you open up an account with them. And so you want to make it convenient and make it work for you within your financial portfolio.
Got it. I know that you just mentioned like all the documents that we would need in order to purchase a home. My question to you is, do you need those documents in order to get a pre-approval, or is that process a little bit simpler?
Oh, yeah. The pre approval is very simple. Yeah. You need some information about your income and all of that. And then also your credit score. So that you could just kind of fill out a simple application with those numbers, but then they have to verify those numbers, of course, your documents. Oh, I didn't mention pay stubs. So I talked about your tax returns, but also sometimes if you've had a change of employer, then they want your most recent pay stubs as well.
So let me make sure that I'm understanding. All right, let's say someone's listening to this and it's like, I'm going to buy a home, regardless of what y'all say. They're like, okay, I know that I need a pre approval because the real estate agent is not going to show me homes without a pre approval letter. And then if I find a home I like, I need to make sure that I can secure a mortgage. So my question to you is, if the pre approval process is very easy, do you still need to do your due diligence on the front end and make sure that you're getting a pre approval from the bank that you will eventually get the mortgage from? Or can you just get a pre approval from anywhere? And then once you find a home you like, you can shop around at different lenders and find the mortgage part. Like, how does that process work?
Yes, you can get a pre approval letter from anyone. So they want to know a little bit about you. They're going to check your credit score and then they'll give you a pre approval letter. And so if you find a home that you love, because, this process is quick, if you find a home that you love to put an offer in, then you want to have that pre approval letter in hand. And some real estate agents may not even show you properties if you don't have that pre approval letter in hand. So that's where an agent can be very helpful. If they have a preferred lender, then that lender can often expedite a pre approval letter so that you can go and start working with the agent as you're continuing to shop different lenders on the back end.
Okay. All right. So, because, my brother's a real estate agent and he told me, yeah, Lee, I'm not wasting my time showing homes to somebody who doesn't have a pre approval letter because I want to know and the seller wants to know that they can actually afford the home. Like, we're not out in the business of wasting people's time. So, you got to get the pre approval letter so that your agent knows you can afford the home that you're actually looking at and the seller knows. But as you mentioned, your agent's going to put an offer in a home. Hopefully, you find one that you like, but then you got to get the mortgage. And so, it seems like that's kind of can take a while, right? Because as a physician, you might have access to physician mortgage, you might have access to a conventional loan, FHA loan. Like, there's different loan products and they may have different features. And then figuring out what interest rate you actually get. Like, do you recommend that once people get a pre-approval letter while they're looking at homes, that they go ahead and shop mortgage lenders and reach out to different banks?
I would say, as you're preparing, doing that research on the lenders is really important because once you put an offer in, that's when a timeline starts. Like, people feel pressured. The real estate agents, I think that they have a certain timeline to get these documents and submit these documents and all of that. So I think if you would do your due diligence to solidify a few banks ahead of time, then that would expedite the process of closing on the home. And it will also make this home purchase journey a little less stressful because it can be. And I love our real estate agent. She's been great. But there's a time when I'm like, why are you all making this so stressful? And she revealed to me that she also has deadlines that she needs to submit the documents by a certain time. And so if you have all of that information, because it's a lot to gather. Like, some people don't even have their tax returns or they don't have their bank statements, all of that. If you can gather some of that, if you could already do the preparation of finding a couple of lenders that you think you might want to work with because they have great customer service, they offer the product that you want. And so then you're just going to have the negotiation piece of the interest rate, then it's going to make the entire process smoother.
All right, one last question, and then I will let you go. My last question is, I have heard from my brother that sometimes when people are considering purchasing a home, they may not have all the cash on hand that they need to cover closing costs, down payment, or whatever. And so some people may borrow from their retirement accounts. And so that was my question is, do you have any experience with people borrowing from retirement accounts? I know with the Roth IRA, as we've mentioned, depending on if you contributed directly or not, you can take out your contributions at any time. Some people might actually borrow from their work 401k, 403b, or cash out an old 401k, 403b and take the tax hit in order to get the cash. I just wondered if you had creative solutions for folks who maybe didn't have the cash on hand. I know we talked about personal loan. I don't even know if you can get a personal loan if you're applying for a mortgage. If you're like, absolutely don't do that, you're going to kill your process. Like, I just need to know if there are like red flags or whatever. So help us out.
Anytime you have a large cash deposit into the bank, they're going to see it. They're going to want to know where that deposit came from. So even if your family is going to give you a certain amount for that down payment, I would reveal that to the bank as you are researching. If you are going to take a loan from your 401k, I would reveal that to the bank as well. And it will just help you to navigate that process without any surprises because sometimes they want additional documentation. Besides taking a loan from a 401k, I don't know if I would recommend cashing out a 401k or doing anything differently. Yes, of course, if you have like Roth money that you have access to, then that's perfectly fine. But they're going to want to know your retirement balances for everything and just tell them that, oh, I'm going to take this X amount out of my Roth for this reason. But you really want to think about the tax implications. You want to think about penalties as well, depending on how old you are. And also know that there's a gift tax. And if you use someone else to help you to fund the down payment, they might also want them to be on the mortgage or on the loan, and it shifts responsibility. So having these conversations on how you plan to fund the down payment with the lender ahead of time will help you to prepare and navigate that process smoothly.
Okay, this is great. This is great. So basically, what you're saying is if you get an influx of cash, they're going to want to know about it, but it's not necessarily going to prevent you from being able to get that home.
Mhm,
Okay,
mhm,
that's helpful because some people who may be starting residency, they haven't gotten their first paycheck yet.
mhm.
Maybe they're finished their training, but they haven't started their attending job yet, right? Maybe that sign on bonus hasn't been in their account yet. So this is helpful to kind of know, can you get a gift from your parents or something along those lines? It seems like some of this stuff is okay as long as you let them know ahead of time, right? No surprises, it seems.
Yeah, you just want to be as transparent. And even for those residents who haven't started their attending physician job, if you have a signed contract and it shows like what the salary is going to be, then you can submit that as well as your expected income. And so that's one of the reasons why I really like the physician products because they're accustomed to working with doctors. But gathering as much information as you can about your income, your expenses, and your assets will help you to better navigate this process and being as transparent as possible with the lender so that there are no surprises because they are evaluating your candidacy as a borrower and making the determination of your interest rates and if they're willing to lend to you or not.
Okay. All right. Well, thank you for answering my many questions. I'm sure in future episodes I'll have more for you. Thank you for the questions. So hopefully the audience found this as helpful as I did. So thank you so much.
I'm happy to do it. And I love your curiosity. It challenges me to say, how could I be more clear? How could I explain this? So it's great because after you've gone through the process, you're like, oh, okay, I could just do it again. They're just going to tell me. But as you're helping someone and guiding them along, some of the little nuances that you didn't think about that become very salient. Well, let's talk about fun money. Alicia, what are you doing for fun? How are you spending your money?
Well, girl, you wouldn't believe this. Even though I traveling a lot, I'm actually planning more trips. It's so funny. The beginning of this year was really hard for me for a lot of personal reasons and just went through just a ton of stuff. And so this spring and summer, I was like, you know what? I need vacations. I need trips. That usually brings me joy because I was going through it earlier this year. And so I was like, I'm going to make the most of my time. I'm just reminded in so many different ways that life is short. So I am planning a trip for Memorial Day, going to
Ooh.
Vegas. I want to see like a WNBA game, but I also think I might catch a show at the Sphere. I've never been to the Sphere before, which is like a really great place where concerts happen and where shows happen. And then I might go to the Jeezy concerts. He's a rapper, but he puts on this orchestra concert. So it's like rap music, but with a symphony
Oh.
band. And it's like very classy. It's like black tie. And so it's like if you want this like classy environment, but it's still rap music, but it's an orchestra, but it's him rap. It's like very different. Anyway, I've heard great things and the show is out there in Vegas. And so the flight and the hotel is booked for Vegas. So now I just got to book all of the shows and events. But yeah, look at me planning another trip.
I love that girl. And let me tell you, that's going to be my goal for 2027. Okay. Because 2026, I can't travel as much as I wanted to. So I'm making that the goal for 2027. I have already started to work with a travel planner, a travel agent to kind of help me to get everything in order. So it's going to be great. I'm going to be Leisha. I'm going to be telling all of y'all about how I'm traveling during my fun money in 2027, but that is not the case right now. Leisha. So I love that. I don't spend too much money at the casino, okay, in Vegas.
Oh, girl, you don't got to worry about me. I don't like losing money. So you don't got to worry about me there.
As I have previously mentioned on this podcast, we purchased a laundromat and our laundromat will be opening in the next week or so. So,
Okay, congrats.
thank you, thank you, thank you. We operated it for 2-ish months and then closed it down for renovations and it looks amazing. I'm so excited, but I've been purchasing a lot of things for the laundromat. So, not personal fun money, but fun money nonetheless. So, new seating, lights, just ways to optimize the business so that it works for itself. So without us having to work in the business. So that's really fun.
Congrats to you. That is
Thank
a
you.
big deal. I remember when you were thinking about purchasing it, when you first purchased it, when you've been working on it, when you've been stressed about it. So it is nice to see the progression and that things have progressed to the point where now we're close to opening day. Thank you,
Yes.
Jesus.
Yes, Lord.
We are going to wish you and pray profits upon profits and revenues upon revenues and less stress.
Yes.
Less stress, more money. Okay, hallelujah.
Hallelujah.
So you gotta let us know how that goes.
We'll do. We'll do an episode on this journey. If anybody is interested, let us know in the comments. Please leave us a review that helps us to get pushed out to more people. So if you found this content helpful for you as you're navigating the thoughts of purchasing a home or even selling a home, then please tell us in the comments, leave us a review, and we can't wait to come back to you next week.
Hello, everybody. It's me, Brooke. I'm recording a little disclaimer for my mommy, Dr. Brittany Halford, and her friend, Dr. Lisa Taylor. Just so you know, they're not financial advisors, tax professionals, lawyers, or financial planners. Everything you hear is for education and entertainment. It's not strict financial advice, you know? So use your best judgment, chat with a tax professional, and all those other people that you need to talk to. Thanks for tuning in today. Keep cruising on your journey to wealth and wellness. Bye-bye.